Hi, everyone, and welcome to this week's installment for StockCharts TV. I am your host, Mish Schneider, and it's certainly been a very volatile and interesting time. We have so many different factors at play here. We have obviously the Fed meeting, which didn't really yield anything too specific, but obviously looks like if things don't fully fall apart in the economy, we may see some tightening as this year goes by. We also have obviously the Russia-Ukraine skirmish going on, and we have a lot of earnings. And that's what I love to focus on with you, because regardless of whether or not the market is range bound, which is something that I talked about with you all last week, there's always going to be opportunities for certain instruments that are either going to underperform or outperform. So I thought we would take a dive into a whole bunch of stocks that have already reported, and then look at just a few that have yet to report or may have already reported by the time you hear this. So let's get started.
Okay, so I always like to give you an idea of the symbols I'm covering, and you can see that the top rows are all stocks that have already reported, and I'm trying to go pretty broad in terms of the sectors. And then the second row, well, a couple of them are going to report tonight, Stryker and Apple, and then the others report next week. These are ones that I'm just particularly interested in. So let's get started. All right, so let's go to the charts. The first one that we're looking at here is Netflix. And what's so interesting about Netflix is after a huge bullish pattern, it started to break down. We were already getting negative once it broke down under the 50-day moving average. And then obviously it really caught its kiss of death under the 200-day moving average. But it was the earnings that really destroyed the stock and sent it down to its low on the day, by the way, when the market crashed as well and then reversed to 351.46. Now, I like to look at a few criteria in order to determine this is indeed a low. Number one is we want to look for some kind of a mean reversion in momentum, which means this Bollinger Band down here has to cross. And that hasn't happened yet at this point. You can see that the momentum has improved, but the Bollinger Band is up here. Number two is in price. So we cleared the Bollinger Band after breaking down above it here on the day I'm speaking to you. But at the same token, this day's high, which was 387.26, we would have needed to see these last 2 days as inside days. But instead, the next day it made a high of 387.71 and did not make a new low, which means this is not the clean reversal pattern that I typically like to see. However, that doesn't mean that Netflix couldn't rally and maybe got a bit overdone. So in order for you to be able to trade this now, instead of saying, I'm going to buy and hold this with a stop underneath that 350 and let it go, you would just simply change your parameters. So I would start with wanting a close over 387.71. We're just maybe testing it today as it's trading, depends on what the overall market does. And then I would not stick around too long. If it breaks down $10 with a $300 stock, giving it a $10 room is not a big deal, then I would be out. But if it holds and can rally $20, which means that you would get a move maybe up to about 407, then you're actually right within the bar of this day when it gapped down. That's the type of trading that I explained to you last week we have to do right now. We have to do really tight trading right here. We have to pick our spots, and then we have to get it out very quickly if we're wrong, because you can see we're in a major downtrend happening right now. And at the same token is if we get a good pop or a 2-to-1 type ratio, get out. So that's Netflix. And I thought that was a good place to start because it was really a terrible start of the whole earnings season. The next one is a medical device stock. Now, the reason why I like medical device stocks is because I did this whole segment on medical devices, and I still believe at some point this could be a sector that finds some level of a floor, but not yet. So Intuitive Surgical reported again that same day. We got a big gap after it reported the same day actually as Netflix. Then it made a new low inside day. I got excited. I was ready to buy it if it cleared over this high right here at 270, 278, but it didn't. Instead, it got above it, but it needs it on a closing basis. So now even though we had the Bollinger Band clear on the mean reversion on price, we haven't on momentum. I would actually almost at this point prefer to see this break down under 254, which is not impossible considering the market could easily break down some more, then give us a reversal pattern, then give us a mean reversion pattern. And this would be actually something that I might be interested in. So that's another one. Now, JB Hunt looks very different. This also reported, and when it reported, it actually did well, except this is a classic example of not only a mean reversion to the top, which happened before, where it went down below the Bollinger Band here, although it never really got above it on the price, but it's also a classic example is no matter how great the earnings are, and this is the lesson you really have to take away with you, is no matter how great the earnings are in a company, whether it's Microsoft, which we're going to get to, or something like this, JB Hunt, gravity can take over in a negative market to a point. And that's where stock picking becomes a real art. And that's what I'm trying to help you with, is what are some of the criteria to make you a better stock picker, particularly during this earnings seasons where you get to get a good flush. And this would be something I would keep on my radar for more of a range bound type market. And by the way, talk about mean reversion. We've just broken the Bollinger Band in price. We've broken the Bollinger Band down here in momentum. So if it came back through and the market stabilized, you'd have around that 190 level to look at. But again, risk tight, maybe to under 187. And then if you can get $6, which would put you right back under the 50-day moving average, this is the way we all have to start trading now. I know some people just don't like to trade that way, myself included, because it requires so much attention. But if you do your homework, you're going to be pretty good. Now, this is Union Pacific. Union Pacific also reported. Now, this one is doing pretty well, right? If you can see here, you've got the 50-day moving average. We're getting an inside day today. We actually did have a mean reversion trade down here, which was interesting. And so I would say with this outperforming the SPY, like we can see here on our leadership indicator, this over 250 could be a really good play. Now, it's certainly possible that the railroads could do well, even if the rest of the market doesn't, because we still need to move goods. And even if we're coming to a standstill, we're still potentially getting over a COVID situation, which means things can move. So this might be right now in terms of post earnings. Obviously, you want to watch it if the market really crashes. But if this can stabilize, you got to risk down to about 238. You can and buy it just over 245. Or wait for it to clear 250 up here, risk down to 245, and see if you can get a move up to new highs. This is possible because it's had so much consolidation. Next one is Morgan Stanley. I actually had this big on my list for today, but it hasn't really set up the way I want. So at this point now, again, momentum is compared to down here. If you're looking here, momentum is not over the 50, even though the price is. And if we take a look here, we have just about filled the gap today, which is good, but it's holding the 200, it's holding the 50. But at this point now, I would probably want a little bit more evidence that it can continue to hold 99. And I would really like to see it close maybe over 101, 102. So there's your $3 risk to make $6. Not so bad. Now, the next one is IBM. Also reported. And I've heard all kinds of thoughts about IBM. But if you take a look at the IBM chart here, the 50 has not crossed back over the 200, so it's in an accumulation phase, not a bullish phase. And we have not been able to get back through this big bar of the day that it reported. We're getting an inside day yesterday, now an inside day today. Momentum is good, not unbelievable, and yet it's still outperforming the SPY. So this could be another contender. Now, of course, again, market conditions will prevail. However, if it can continue to hold around this 130, and consolidate, and we see the 50-day moving average come up and get a golden cross potentially, especially if the price isn't too far, then there's no reason to think that IBM, which has been sleeping for quite some time, can't finally have its day. Next one is getting more into a commodity. This is steel dynamics. Obviously not so great. But again, let's take a look at the parameters. We have a new low, not an inside day, and not a close over this high. Today, though, we're seeing it move up a little bit. The momentum is actually having a mean reversion. So this could actually be interesting for a very short-term type pop trade, particularly since it is steel. And if it does manage to go back up, I would say I would probably not risk more to than under this low of 54-ish, looking for maybe a move back up to 60. If things really got going again and the market stabilized, maybe it could get back over those moving averages. Microsoft was the biggie. Microsoft had blowout earnings, and that's why initially in the aftermarket it sold off. This, though, unfortunately, with a new 60-plus day low, inside day was another one that I was hoping would have a reversal pattern. In other words, a close over 297.11 the day before, but it did not close there. It closed at 296 and change. So now it's up. It's getting another inside day, obviously showing some leadership. Obviously, here's your mean reversion trade. So I'm not saying it's the worst trade in the world. I'm just saying for a swing position trade, it's not the cleanest reversal pattern. So this would be the type of thing where I'd be like, breaks 300, I'm gone. If I can get a move back up to around 315, 314, I would be so thrilled to take a little bit of profit, raise to a no loss stop, and see if the market improves. Can we get back up to 325? After all, it is Microsoft, and they're doing some really good things. The next one is Texas Instruments. Now, Texas Instruments is another one, and you could see here that this actually, let me just make sure, it had a new 60-day low. It had a mean reversion. So far, good. The high this day was 178.62, but the close on this day was not as high, 178.30. Remember, the close has to be higher than the day it makes the new low. So now look what's happening. And this is what I fear for these that don't have these absolute clean reversal bottoms, is that we're seeing the major sell-off here. Now, again, this makes a new low and turns around. That could be something interesting. Now, this is in the property space. And this is Boston Properties. And it's a REIT. And that's a real estate investment trust. And you can see, I mean, real estate was where it was at for a long time, and now underperforming, momentum not great. And again, reported inside day, never had that clean reversal pattern on the close. Is it any surprise we're seeing this sell off on a 200 and sitting right now on the 200-day moving average? Does that mean this stock is dead and I wouldn't touch it at all? Not necessarily, but I would want to see basically either a new, this one, by the way, wasn't a 60-day low. So one thing I will tell you is, all right, 12, you know what? I'm going to change my tune on this one because it had the 60-day low here, but that doesn't mean it was a clean reversal. It had a 60-day low here, followed by an inside day, but still didn't close above that high the next day. So you did get a rally, but it was short-lived. This was not a new 60-day low, obviously, because it happened here. So it almost feels to me like this needs one more good whoosh, and then this might be a more interesting opportunity here. Next one is Citrix. And I wanted to throw in a tech semiconductor. And again, this reported, and the momentum is interesting because if you look at the momentum right here, it took it out and then failed it just like it did here. So you had to actually mean reversion to the downside, but it hasn't yielded much. What is interesting is you're getting the big bar here, inside day, a second inside day, and not quite a third inside day here, 103.48. 103.59. So after two inside days, if this can close over 103.48, then at least you can be interested in it. And then if you clears over the 200-day moving average or figure around 105, you got probably about a $5 risk here, and to see if this thing can work itself higher. So that's actually another one that's relatively interesting in the tech space. Now, the next one was Tesla. That just reported. Tesla actually had really good reports, but it came out that they're having issues because of the chip shortage. So this could be another wonderful opportunity if you're patient enough to buy Tesla. You have the 200-day moving average right here, and that 200-day moving average is going to give you an opportunity to buy this potentially if it breaks down and gets to around 815, even 800. That's where I would be looking for some kind of a reversal pattern and also some kind of potential mean reversion. So right now you can see the Bollinger Band is coming down sharply. The price momentum is coming down sharply. If you can get close here and a reversal, new 60-day low and a mean reversion, then I would say go ahead and buy Tesla, but make sure you're out if you're wrong quickly. The next one is EW. And this is in the medical device, and I covered this a few weeks ago. So I wanted to see what happened after earnings, and you can see not so pretty. So the whole medical device space has been impacted by Omicron, but at some point, and that's what we do, we look at things fundamentally that might make sense, but we don't trade them until they set up technically. That's the sign of a really good trader, somebody who's going to be in this game for a long time. So right now we're in the new 60+ day low territory. We're certainly in the potential mean reversion territory if this reversed, and certainly in momentum, the same thing. So what you want to watch for is where does this find its established low? Certainly, if you go back in time here around this 199, if we go back to where I'm looking right here, back in June, July of 2021, before it had this huge takeoff, we're down to that support. So we know we've got a good risk area. If it can have a reversal pattern, which means either an inside day and then it breaks out, that's usually what the case, or it doesn't have an inside day, makes a new low, and then the next day it breaks out over that high. This would be one to keep your eye on. I like this for a potential, but like I said, not ready yet. Vertex is another one. Now, Vertex chart also looks very different than what I just showed you. So what's interesting about Vertex is that it's actually rallying in the face of the market going down. So that's good. It's going reverse. So Vertex Pharmaceuticals in the healthcare industry, no surprise, right? And you've got, the momentum looking good. What you have right here now is a situation where this is the 6-month calendar range high right here at 234.58. It was the January high. So even with the good earnings and everything, I would say to be super conservative in this environment, you want to take out 234.58. And then you could probably risk maybe about $8 to under 226. And then, of course, what you really want to see is $16 move from here. So you want to see if this has the legs to get up to 250, which would virtually put this. Oh, I'm not able to scale here. Hold on. Nope. Sorry about that. Which would virtually put this in a situation where, let's change it to a weekly chart since my cursor is not behaving, where we wouldn't even be at new all-time highs. We'd be back at the highs that we saw back in 2021. So this is a contender. This is definitely an outperformer here. So jot this one down. Over the highs, $8 risk, looking for at least 250. Okay, next one is FCX, back to the commodities, copper. We looked at steel, now we're looking at copper. Obviously, not looking so pretty. And again, there's no range situation here in terms of a new low. We'd have to get down to about 35. But if it does get to 35, I'd keep an eye on it. Or if it can't really break down under the 200 and starts to turn back out, then you would have a risk to under the low, like maybe even today, to see if copper is going to turn back up. Next one is LVS. Now, Las Vegas Sands was looking very, very promising here. This is why moving averages are so important. It got right to the 200, tried 3 times here to get through it, faked people out here, came back down. This is why sometimes it just doesn't pay to trade until after earnings. And now you can see it's coming down. But overall, it's still a strong instrument, and you had your last peak high here. So somewhere around this 43 level could turn out to be support. So in this case, if it can find some kind of a base and floor and hang out, and if the market doesn't crash, or if it does crash and this continues to hold up, this would be another one, especially since it's a return to normal type trade. So I like that I would possibly take a poke at if we can have two closes over that 200-day moving average. Okay, a few more. Now, these are the ones that haven't reported yet. So let's talk about Apple. Apple right now, as you can see, is under the 50. I've been saying if it can get down to 145 figure, even 147, you've got a 50-week moving average there at around 145. That could be a gift, or at least let's put it this way. It would be a situation where you would know right away if you were wrong if it broke down under 145. On the flip side, this is Apple. So if it can get a good earnings report and clear 170, now you have a whole new trade. If it clears 170, then what I would do is risk to, let's say, just under that 50-day moving average. You got to figure maybe somewhere around 168, 167. Yes, we're playing it that tight if Apple takes out 170, because if it reverses, you want to be gone. And Stryker is the next one. Also in the medical devices, you can see where my mind has been going. What intrigues me about this one is that we've got a nice amount of support down here in the lows at 235, then at 240. Again, more support here around 242. We're in a bear phase, but this one I would just keep an eye on to see if we get some surprising support and then can get back over 260. Now, again, I'd rather buy Lifesciences. I'd rather be looking potentially at Vertex, which we talked about before, but nonetheless, if this was strong, it would help that whole space. BABA is now, we're going to next week. This reports next week. What intrigues me about BABA is number one is Buffett's been, not Buffett, the other guy, Munger's been buying this. This has also got a nice low here with a reversal pattern that happened. This is a legitimate reversal pattern, made a new low. Next day, it cleared and closed above that high. So you've got your risk here at 108.70. And if it can hold 108.70, I would not be afraid of this one if it starts to move up. I would just be gone if it breaks down under 108.70. So you'll have to wait till February 1st on that one. When I pause, it's because I'm taking my own notes. Okay, next one is Match. I thought Match would be fun to look at because, again, it's Match. And people have been alone a lot, and possibly we could see an emergence of dating. We could have, again, this reports next week, so you have to wait, but this is certainly setting up not only for a new 60+ day low reversal trade, but it's also setting up for a mean reversion trade. So wait till next week and see what happens with Match. You might have a very low risk opportunity there. And just to wrap it up, we've got Facebook, Meta, excuse me. Now, Meta also did not have a reversal pattern here, but it hasn't reported yet, so I wouldn't do anything until next week. It reports on the 2nd. But this would be another one. If it breaks down and gets anywhere near 275, that could be a really good, interesting trade to trade. And at the same time, if it winds up holding above 300 on the earnings, then you might be able to have an opportunity to buy it with a stop under 289 to see if this has traction. It still is Facebook, even though they gave up their whole Diem thing. I was reading about that today. QCOM has been another very strong one. Last earnings report, I remember it did unbelievably well, but it sold off. And now you got, again, a situation where you're coming down to support. You had a big gap here. So let's see what happens. If it does not report well, or it sells off after the report, but yet holds above this 152.67, you might have an opportunity to get into QCOM. That's still a very, very good company. And the last one, I figured I'd give you a retail stock, is Capri. And I like looking at Capri. This is Michael Kors and Jimmy Choo, because it classically always does well. Now, you did have a new 60-day low, and you did actually clear above it the other day, but it doesn't matter to me because right now we're going to be looking for earnings. However, keep your eye on this one. If this thing can hold back over 57, you got a pretty tight risk to under this low here of 51.45. See if this moves up. Market conditions, of course, are going to prevail. And at the same token, if it doesn't report well, then you might be looking at this one, say closer to, let's say, around 45. 40 to 45, that would be good value for this company, again, unless we're going into some major recession.
Okay, I hope this was helpful and gave you some actionable ideas. If the market actually manages to find a floor, certainly you have plenty of opportunity, as many stocks have gone to a value that makes them very tempting, but more importantly, with a very good risk. Thanks so much for watching, and bye for now.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.